Okay, good morning, everybody. Sorry, got a little start off here. Started on the wrong foot. I was getting wrapped up chatting with everybody in the Discord and forgot it was about at 8 p.m. Eastern Standard, or 9 p.m. Eastern Standard, 8 a.m. my time. So I still got to get this thing set up. I got to stop being so easily distracted. Anyways, guys, we have a lot to cover today. We're going to be looking at some videos that came out over the weekend, or not the weekend, but came out yesterday, as well as just some updates on NVIDIA. So we're going to be looking at a video that it was an interview between Scott Bessent and Yahoo Finance. It was actually really, really informative. We're just going to look at a couple key moments, and then you had the Federal Reserve Jerome Powell speaking. So we're going to be looking at that video as well. It's only a couple minutes, and then we'll get into some news about NVIDIA, because I think this will give us kind of a better picture of what is actually happening. You know, people think that this whole tariff thing is just, you know, like, I think people are not understanding like this whole, like, it's not just tariffs. It's not just about this, you know, using tariffs, putting it on countries, and then helping us make money, you know, for getting the tax bill passed. There's something bigger at play here. There's definitely something bigger at play. So we're going to talk about that, and we're going to talk about why it's important, especially this whole NVIDIA thing, because I want to share with you guys just a quick white paper that came out from the US government. So it's very, very important we at least cover that, so you guys can understand at a bigger macro picture how all of this is tying together. So yeah, in the short term, you know, stock volatility, that kind of thing, yeah, it really, really sucks. And we are, you know, obviously dealing with, you know, bloody days like today where the stock market is dropping, you know, almost in free fall, you know, but there is a bigger game being played. And I think as investors, we need to understand this bigger game being played so we could better position ourselves. I still am very bullish on NVIDIA. I still think there's a lot of opportunity out there, easily for people to pick up shares on the cheap. Whether it could drop more, I have no idea, right? There's analysts all over there's no shortage of people and opinions saying that stocks can go lower or stocks can possibly rip higher, right? There's no shortage of that. So I just want to give kind of my two cents on the whole situation and kind of how I'm looking at this. All right, so real quick, just want to say hello to everybody. Again, good evening. I totally forgot to log into my dividend portfolio here. So I am running a little bit late. Hey, M2, welcome back, man. Glad to have you on the stream. James, man, I'm sorry to hear that, dude. Yeah, it's pretty crappy right now. I'm not gonna lie, it is pretty crappy. Yeah, that sucks. You sold all your xdte. Yeah, dude. I mean, follow that strategy, man. The income factory, like, that's a great strategy. I don't think it's really talked enough about, but I think the income factory is a great thing. Like, high yield income investing is so freaking nuanced. You have to be careful, and you have to deal with the lows of the lows, you know. But not only that, but just my thoughts, right? Just my thoughts on all of this. Like, yes, it is the high yield income space. You can get really good dividend yield. You can build real passive income, blah, 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 right? The highs are high, and then the lows are extremely low. And then when you start putting in margin in between those two things, that's when things can get really, really good, or really, really bad, shitty, spicy, however you want to call it, right? So I totally understand where you're coming from. I would honestly, if you had a strategy at the very beginning, stick with the strategy, brother. Stick with the strategy. Like, you know that strategy better than anybody else. You know, obviously, if you've done your research. Steve Bavaria I think it's Steve Bavaria. I always think like Bavaria cream puff. But anyways, Steve Bavaria, who I believe is his name, who authored The Income Factory. He is a very smart, intelligent person. I looked at a lot of his work. I haven't read through his whole book yet, but I read a lot of his articles and see some of the interviews he's done. Very intelligent guy. Hey, what's up, Alex? Sauce, what's up, man? Hope you guys are doing well. Well, Alex, I know you're doing well. You're not spreading any misinformation here. All right. All right, guys, let me get into this stream. All right. Before we spend all day just bullshitting. Okay. All right. So today, portfolio obviously not doing hot, along with some of you, I'm sure. Net annual income's remaining the same. April income remaining the same. Dividend yield is a slight little higher than last time I checked. I'm down officially $70,000, which is a total kick in the butt, because I was not too long ago, yesterday, I think I was down only 62,000. So now I'm back to almost a $70,000 in the red portfolio, which obviously is really, really, really shitty. But you know, hey, we got to keep going. We got to keep moving, right? You can control what you can control. I can't control what our president's going to do. I can't control how China is going to react. I can't control politics. I can't control if the stocks are going to go up or down. I can only, you know, control what I can't control, and that's my emotions, my discipline, and my investment strategy. Okay, so those are the things I can control. Those are the things I'm always trying to keep at the forefront of everything, right? If things get real spicy, you know, because I know we still have like another trading day, and then there's a holiday. I don't track American holidays. I haven't tracked them for like years, to be honest, because I forget what holidays are actually like. But I do know that, you know, we're only going to have a couple trading days this week. And so hopefully we end on a green day. We will see tomorrow your guys' time. So, hey, welcome back, Senpai. What was it? Profits over screenshots, strategies over spreadsheets every day of the week. All right, so this is the portfolio, guys. All right, so now I really want to start getting some lost porn in here, so or lost corn. I got to be careful with the algorithm. So maybe some lost corn in the future. We'll see. All right, so this is going to be the first video that I want us to go over. This is the Secretary of Treasury, Scott Bessent. I always like to follow whatever he, you know, whenever he does an interview, whenever there's something written about him, or whenever he does a press conference, I like to listen in on what he's saying, because if anything, it's going to be between him and it's going to be between Lutnick, the Secretary of Commerce. It's going to be between those two and Trump that are really going to have the biggest effect on the stock market. And not only that, but Scott Bessent, very intelligent guy. He's a former hedge fund manager, so you know he's been in the finance game for quite a bit. All the press interviews I've seen him do, he's very well spoken, really intelligent. And I mean, I'm not the smartest guy out there, so I can understand kind of what he's saying. So I hope you guys will get some value from what we're about to look at. But it's just going to give us a little more clearer picture on what's going on behind closed doors. So I got some timestamps in here, so we'll just take a quick look. We'll be skipping skipping around. All right. So here we go.
What do you say? You mentioned in your prior life, of course, you were a hedge fund manager, long career. We have Jamie Dimon out there saying a recession is likely. Just yesterday, Goldman Sachs CEO David Solomon said there were.
So Jamie Dimon, also another very intelligent person. I watched his full interview that he did, I think yesterday or over the weekend. Again, Jamie Dimon is one of the big name bankers. I like listening to everything he has to say. So JP Morgan and Goldman Sachs recently came out with their updated forecast for a recession. So this is basically the Secretary of Treasury's kind of rebuttal to all of that, which I think is kind of funny.
Prospect of a recession has increased. You know these leaders well. Mm-hmm. What do you say to these folks that are worried about a recession?
Look, I think that the news cycle, for whatever reason, is focused on tariff policy, and the Trump economic policy that I'm part of the team that's in charge of implementing it is really a three-legged stool. So tariffs are getting the majority of the publicity now, but we were having very good luck, or very, very good progress. It's not luck because it's been a lot of hard work on the tax bill. So the tax bill is moving through the Senate, moving through the House. I think we're going to have some permanence for the 2017 Tax Cuts and Jobs Act, probably by 4th of July. And I think that will give people certainty. And then the third leg is deregulation. So the tariffs came in quickly, taxes by midsummer, and then we think the deregulation, which could be substantial savings for households, will kick in third, fourth quarters.
Why do you think then the likes of Jamie Dimon and David Solomon, why would they be concerned?
Here's the rebuttal.
That's their job is to be concerned, but
it is their job to be concerned. So this is why every time I hear like Goldman Sachs publishes a new forecast, or JP Morgan publishes a new forecast, or BofA, or Vanguard, or Fidelity, it's not that you should just disregard them altogether because they're, you know, just trying to create a hit piece, or it's politically driven or whatever, right? What I'm saying is that take the data point, read what's going on, read their insights, because I mean, these are major institutions, but at the same time, don't freak out. Don't freak out. Don't start declaring that, you know, the sky is falling and then sell everything out and go, you know, moving the treasuries. You know, could a recession hit us? Yes. That's, you know, that's a good question. You know, how is your portfolio going to weather that? You know, because there's some people with large portfolios, and to sell out of everything right now, they would take a massive tax hit. Not only that, but they would also probably cement a lot of those losses. So instead of, you know, just selling everything and then moving everything into bonds or something, maybe you can consider running a scenario for yourself. Like, how would you react? How would you feel if your portfolio dropped by 30%, right? If you're using margin like I am, you know, what would that mean for you? What would that mean for your portfolio? How close would you be to a margin call? What assets would you have to sell? Should you probably start shoring up some cash now and then moving it into, you know, treasuries, or moving it into maybe, I don't know, paying off some margin or something, right? These are the questions you have to ask yourself. So it's not just freak out, sell everything, and then move to cash, right? It's, you could be a little more strategic, a little more careful about these things. So here's another interesting thing about trading partners. So I thought this was also very interesting.
Days out from the tariff pause ending, Mr. Secretary, how many deals do you envision being done by the time that pause would lift?
yeah, well, Brian, let's set aside China. There are 15 large trading partners.
Important.
We set aside China. There are 14, and we're in rapid motion and setting up a process for the 14 largest trading partners.
14 largest trading partners that the United States has outside of China. So you have Japan, South Korea, probably Australia's in there, Vietnam, Thailand's probably in there. Then you have Canada, Mexico. You have the EU, the European Union. You have the UK. You have all of these other countries that right now are working on deals with the United States, right? It's not just China. So, you know, this large, massive sell-off that's happening, obviously it's, you know, I think it's emotionally driven. It's sentiment driven, you know, kind of a sell the news type of thing. It's not to be underestimated that the impact from China tariffs, you know, on American goods, et cetera, there is going to be an impact for sure. Absolutely, you know, unequivocally, yes. You know, but there's still 14 other trade partners out there that the United States is working with. And again, when we're talking about a bigger picture, when we're talking about the global stage, you know, the United States is trying to, again, get better influence in these other countries to halt trade or limit trade with China, right? Limit their influence. So again, this is a big deal. This whole tariff game really just showed the United States who's friend and who's foe, right? Or who's a rival, who's not going to basically side with the United States. So again, this is like a big chess game being played at a much higher level. Yes, as investors, we're these tiny little specks way down below with our, you know, $1,000 portfolios, and we're taking the brunt of the pain. But, you know, what I'm trying to say is that there is a silver lining to all of this.
Partners, most of whom have very large deficits. So in 90 days, are we going to have a complete a formal legal document done and dusted? Not likely, but I think if we follow
90 days, we're not going to have everything solidified, but, you know, we could have at least more certainty, more clarity on everything.
the process, we could have substantial clarity on those 14 away from China in terms of agreements in principle. And then once we reach a level that we've agreed on and they've agreed to lower their tariffs, lower their non-tariff barriers, currency manipulation, and subsidies of industry and labor, then I think we can move forward.
So again, right there, huge points, all right? Huge points about over the next 90 days, right? We may not have agreements in place and things like that, you know, obviously would impact the stock market, but we'll have more clarity as more news comes out, as more, probably narratives come out from either the administration, the Secretary of Commerce, or the Secretary of Treasury. As things get more clear, then we should expect the stock market to continue going back up, right? We should get out of this whole bear market territory. We could probably be here again, probably at these levels for the next 90 days, probably 120 days, but then we should be able to see greener skies after that. All right. So again, guys, got to hang in there. I know it's painful. It sucks. It definitely really sucks, especially if you're a brand new investor and you just got in. Well, now's the best time, but you're probably not used to this kind of volatility. Let's see, 1615. So there's another point on here about NVIDIA and TSMC that I just want us to hear, right? Because you guys already know that I'm a pretty decent holder in NVIDIA. So when I heard this, I was like, just interesting data point.
Important was it to get news that NVIDIA is going to spend $500 billion here to make AI supercomputers?
NVIDIA, I believe, has 98%, which is incredible, of the upper end chip market.
They own the market. Okay. So that was just a bullet point. It's just a data point. So every time I read articles about NVIDIA getting dethroned by all these other players and their share price is collapsing, maybe NVIDIA is not as good as people might think, all that other stuff. I don't subscribe to that thought. I'm not in that camp. I'm in the camp that, NVIDIA owns that market. They own it bar none. They're going just like Apple. Like Apple is one of the biggest players. They have such a hardcore, diehard fan base that you cannot convince Apple users to switch over to Android. Like they refuse to. And Apple, interesting thing about Apple, they're never the first to market on anything. They never are. Smartphones, laptops, AI, whatever. They're always second or third. But anytime they come out with products, it is usually of highest quality, right? Usually of the highest quality. So again, like NVIDIA has that market share for AI chips and for GPUs. I don't think, there's always this news that, China's coming out with their own stuff. It's going to be a major competitor to NVIDIA. Yeah, it might be a competitor, just like AMD is, but I don't think their technology will be able to trump what NVIDIA has already accomplished. All right. So again, those are just my two thoughts. I'm not trying to be an NVIDIA bull here, but I'm just saying I do have a sizable position in there. So I like to cover anything of noteworthy whenever it comes to NVIDIA because I'm investing in NVIDIA.
And I think that for NVIDIA to bring this home is very important. And one of the greatest security concerns for global economy is the number of chips made on the island of Taiwan. To have one of the most important components made in one place is not great risk management. But you could say that about anything. Like you wouldn't want anything, wouldn't want to source just one thing from one place, especially when the whole world runs on it. I mean, imagine that.
Yeah, so basically NVIDIA was being, kind of manufactured or put together in Taiwan through TSMC, Taiwan Semiconductor Company. The biggest risk there obviously was an invasion from China and China taking over the island because that is in their, I don't want to call it their manifesto or whatever, but it is in their doctrine to take over Taiwan at some point in the future, right? Like there's no shortage of that narrative out there, right? You can Google this stuff. They've been pretty vocal about it recently. Taiwan Semiconductor, one of the best companies in the entire world. Okay. If that company got taken over by China, obviously the United States would be SOL because now who's going to manufacture these, GPUs for NVIDIA or they would basically corner a big chunk of the market by taking over TSMC. So what does the United States do? Hey, let's move TSMC over to the United States. Let's build a factory here. Oh, NVIDIA, why don't you just move your manufacturing here as well, right? Let's onshore everything. So now the United States corners the entire market. Again, this is a big global chess match right now. And this is between two superpowers. So again, all this stuff relates to us as investors because it gives us a clearer picture of where to put our dollars, how to look at this, how to look at the world stage. And when things happen in the news or things happen politically, how it actually affects our individual holdings. So this is, kind of a masterclass in, I guess, critical thinking for, looking beyond just balance sheets and stocks, on a chart. This is looking deeper and at the bigger global stage. So we'll move on from this point. And I'm going to skip this last point, but basically Scott Bessent was saying that, he's all about financial literacy. The stock market is a long-term hold. In the short term, yes, it goes up and down. The highs are high, the lows are lows, but over the long term, the stock market is the best investment. All right. So we'll just close out that video. So looking at this other video from our Papa Powell, who obviously is the head of the Federal Reserve, and he was in Chicago, and he was basically just giving a quick little speech. So we're just going to cover this. It's only about 4 minutes long, and then I'll just kind of give you guys some thoughts.
Briefly discuss the outlook for the economy and monetary policy. So, at the Fed, we are always focused on the dual mandate goals that Congress has given us: maximum employment and stable prices. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position.
You heard it right there from the horse's mouth. Despite everything going on, all the craziness in the world over these last 2 weeks, the U.S. economy is still very strong, still in a great position. All right.
The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective.
Last reading was, I think, at 2.4%. So again, that was pre-tariff. So we'll see what the next couple of readings or these next couple of months come out. This is why I was thinking, when I started reading all this stuff about, the Fed's coming out to save us, we're going to lower interest rates, in April. I was like, that's not going to happen. There's no way. Since December, the Federal Reserve has been saying that the U.S. economy is strong and it's doing well. Inflation is slowly coming down, and they're going to continue to wait and see how these tariffs are going to impact the United States. But not only that, they're going to wait and see. They're not just going to react off one bad report or two bad reports, right? They're going to take a wait and see approach, and probably by the third or fourth reading, then they'll react, right, with an emergency cut if it happens. This has been collectively known as the Fed put or the Trump put. It's basically the Fed or the President of the United States coming in to save the stock market.
Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's solid pace. Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly. In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth.
So just real quick, GDP growth, the reason why this is so important, in case you guys don't know, GDP growth is basically, if you were to have, so all this talk about recession is because if we are in a recession, we would have two negative quarters, or was it two negative quarters? Yeah, I believe two negative quarters of GDP growth, right? So kind of understand, and that's a textbook answer, but the actual answer for recession has kind of changed over these last couple of years. At least I think it's not, because if you have a strong labor market, everything is good by all other measures. The economy is really strong. Everything's doing well by all other measures, but you still have, economic growth or GDP slowing down or even going negative like that still wouldn't translate to a recession. So again, it's like that. The textbook answer is changing. We could already be in a recession. I'm starting to kind of believe that we already are. We're just waiting for all the indicators to catch up. But again, understanding when recessions happen usually happens in hindsight, right? We usually figure it out after it's already happened. So GDP growth is obviously very important, and it's going to be kind of in trouble if, people are not buying stuff, goods and service products from the United States, right? We're not selling anything.
Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns.
China.
Outside forecasts for the full year are coming down, and for the most part point to continued slowing but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month. while job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level. Wage growth has continued to moderate while still outpacing inflation. Overall, the labor market appears to be in solid condition and broadly in balance, and is not a significant source of inflationary pressure. As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking ahead, looking forward, the new administration is in the process of implementing a substantial policy.
All right, so this is where we get to hear exactly from the Federal Reserve how how they're going to view these tariffs and how the Trump administration is going to navigate the way ahead.
Changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. These policies are still evolving, and their effects on the economy remain highly uncertain. As we learn more, we will continue to update our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs.
Near-term inflation, so they're projecting or forecasting that probably the next couple of readings will probably once tariffs are actually I'm not gonna say priced in, but once the tariffs are actually like in effect and actually affecting the economy, then we'll have a better reading for inflation and how the tariffs are actually impacting the United States.
Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well.
So boom, right there. He also mentions that, inflation from tariffs, not going to be as impactful over the long term. I mean, that's essentially it. He's always kind of said that. He said tariffs, they do cause one-off inflation, but it's not long term, right? It's transitory. But again, that word transitory, he's like, he doesn't have a good track record with that word.
Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored.
All right, that's pretty much it. But yeah, I mean, you guys heard it. This was just his speech at the Economic Club of Chicago. I went through it. I still feel pretty good, about over the long term how these tariffs are going to play out. Again, 245% tariffs on countries is not sustainable. It is a very costly trade war, and wars in general are very costly. So I really think at some point the Trump administration and China, they're going to come to the table. They're going to negotiate, renegotiate. There was an article. I'm not going to post it here because it seemed to be kind of like, I'm not going to say clickbaity, but the source is familiar with Chinese thinking, right? Like that's not a good source. I don't know who that source was. It could have been a think tank for all I know. But essentially that article was saying that, China's willing to negotiate if, some of these things are met, some of these conditions are met. Basically, they want the United States to nominate a trade advisor of some sort. They also want the rhetoric, referencing J.D. Vance's, kind of stupid comment, about peasants in China. But yeah, they also want that to stop. They mentioned something else. I think they also brought up Taiwan and the sanctions that the United States already has on China. So again, 245%, ridiculous. Hopefully we stay at 245%. I really think, again, it's just going to be a tit for tat thing. It's all for show. But this stuff is not sustainable at all. All right. Not sustainable at all. So yeah, I see. I seen the comments from James. Powell seems pretty sharp to me. I think I never looked at the prior Federal Reserve chair, or I was never this involved, but definitely I like whenever Powell does his stuff because I like the objectivity of his assessments, and that's what he always says in all of his, like, he doesn't get involved in politics. He knows his role. His role is monetary policy, regardless of red, blue, Republican, Democrat, liberal, conservative. His job is to navigate the way ahead for monetary policy based on what's in front of him. And always what's in front of him is some administration doing something silly or crazy, right? So his job and the Federal Reserve's job is just to navigate the waters, and they have that dual mandate: maximum price stability and lower, whatever that other one was. I forget the second one. But anyways, let's jump ahead. So this popped up on my feed. This was for Japan. All right, Japan's one of those major trading partners. They were the first ones to come to the table and say, "Hey, we're ready to negotiate. We can, do all this great stuff for you guys." So Trump, basically jumped them ahead, and he actually, like, the president of the United States actually joined in on the talks. Right? Usually that's left to his cabinet, to his his lieutenants. People like the Secretary of Treasury, people like the Secretary of Commerce. So for him to join in on those talks is kind of a big deal. So President Donald Trump on Wednesday inserted himself directly into the trade talks with Japanese officials, a sign of a high stakes for the United States after its tariffs rattled the economy and caused the administration to assure the public that it would quickly reach deals, right? Because that's what we're looking for. We're just looking for some type of news, some type of narrative saying that, hey, deals are getting reached, right? So over these next couple of weeks, I really think we'll probably start seeing more and more news come out about new deals being reached, about trade agreements being reached, and that will be a positive sign for the stock market. Because again, the stock market, we do not like uncertainty. Business owners, CEOs, they do not like uncertainty. It's hard to navigate and forecast the way ahead when they don't know what the administration is going to do next. So hopefully these trade agreements get solidified, and then maybe in the next 90, 120 days, a lot of these tariffs get completely removed, right? With all these new trade agreements in place. So the thing I'm noticing with our current president is that he will switch gears just like that. He will switch gears. One day it might be tariffs on Canada and Mexico, the next it's on China, and the day after that it's on the whole world. So again, more to be seen, right? The president attended a meeting alongside Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick, top economic advisors with a central role in his trade tariff policy. And that was pretty much it. Again, all these links will be down below in the description at the conclusion of this stream, so you guys can go back and read it for yourself if you want more clarity on it. So this news hit and completely destroyed NVIDIA's gains over the last week. Same thing for AMD. So AMD and NVIDIA were impacted the most by this. They are US based companies. You guys know AMD and NVIDIA by now. They basically create CPUs and GPUs, and there's been a big emphasis on NVIDIA because their GPUs are used in training artificial intelligence models. Very big deal. All right. And we're going to be going over this quick white paper from the government. I forget what committee it's from, but basically it's outlining the dangers of not only NVIDIA's chips in the hands of China, but it's also going to give you guys insight into this bigger game being played, all right, between two superpowers. All right, a new U.S. export requirement on NVIDIA, AMD, part of an effort against China's AI ambitions. Okay, the new export licensing requirement targeting NVIDIA and advanced micro devices, AMD, artificial intelligence chips are part of a larger effort to block China's AI ambitions, according to the report by the New York Times. The Trump administration is considering applying penalties to block DeepSeek, a China-based AI company, from purchasing any U.S. tech. The report said it is also considering blocking Americans' access to DeepSeek. All right, I've said this about DeepSeek and about China. Anything they own has direct ties to their party, direct ties to their government. If you're using DeepSeek, all that information is going straight to China, right? Their Huawei devices, whether it was their phones, their Wi-Fi access points, or their routers, or their switches, or even their little mobile hotspots that you can buy. You can buy them out here in Thailand. You can buy them out here in the rest of the world. It's these little Huawei like hotspots you can for your cell phone. You can just put in like a SIM chip and reload data on it. But all of that stuff feeds data directly to China. All right. Every single part of it. So every time I see, like this whole thing about DeepSeek, I'm like, this is a total like scam. Like this thing is not, it can't even hold a candle to OpenAI, in my opinion. Right. There were white papers published saying DeepSeek is getting better. It's getting faster. Then Alibaba came out with one, or Ant Group or someone else came out with one. And it's supposedly better than DeepSeek. But again, I just don't believe everything that comes out of China. I took a little flack for that, for making that comment. But again, I mean, they lie on a lot of their stuff, right? Every business out there has some type of connection to the Chinese government. Okay. It is not a free market. It is not an open free market. Any of these big tech companies are going to have direct ties to the party. All right. So, yeah, they might have to fabricate some stuff, in order to kind of scare the competition or to make the competition react a certain way. Right. Think of like the whole rocket thing with, to the moon from, Russia, United States during the Cold War. Right. Who's going to spend the most money to basically bankrupt their country to get to the moon faster? Right. Or to get beyond that. Right. That was pretty much it. I don't know. You guys tell me, tinfoil hat, conspiracy theorist type of stuff, but it does make sense, right? So anyways, this report makes it clear that DeepSeek isn't just another AI app. It's a weapon that the Chinese Communist Party arsenal designed to spy on Americans, steal our technology, blah, 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 right? Essentially, the United States is trying to curb chip exports to China in order to halt their AI ambitions. Not only that, they came out with, and when I say they, I mean NVIDIA. They came out with the H20 chip. The H20 chip was designed for export, right? It was designed for export to China versus the Blackwell, which should not be shipped to China because it's a much more powerful chip than the H20. I think it's called the Hopper or something like that. So NVIDIA designed this chip for export, right? For export to China. But recently, as of April 9th, the US government told NVIDIA that they're going to need some type of license in order to export stuff. And I really think this was kind of like out of a left field type of deal. They were holding their cards. NVIDIA was holding their cards, waiting to see what was going to come about from the China-US, fight or fallout. And unfortunately, I think they lost that. Or another train of thought is that the US government placed this on NVIDIA as kind of leverage to hold over China, so they don't get a hold of these H20 chips, because their company's placed, I think, like a $6 billion order for these NVIDIA H20 chips. But now NVIDIA can't ship them, which is obviously not a good sign. And then that's just an escalation in the trade war. And then not only that, we take that a step further, NVIDIA's share price decline, right? So I'm not going to go through the whole article, but basically NVIDIA did not warn at least some major customers in advance about the new U.S. export rules. It was told about a week ago, requiring it to obtain licenses to sell to China-focused artificial intelligence chip. According to two sources familiar with the matter, the U.S. chipmaker disclosed on Tuesday that American officials had informed the company on April 9th that its H20 chip would require an export license for sale to China, right? And obviously they didn't disclose that. This news just popped recently within the last day or so. So again, NVIDIA didn't mention that at all. So I really think this came, this was like a last ditch effort or by NVIDIA to wait it out, or this was the US government basically saying, hey, since they want to raise 245% tariffs on us for not buying our Boeing jets, right? Because China said, you know what, we don't even need your Boeing jets. You can keep them. And that's not good for Boeing, right? Which is a major U.S. defense contractor. So in retaliation, the United States is like, okay, well, hey, you don't get your H20 chips then. So again, it's just constant escalation. At some point, both of these countries are going to have to come to the table because trade wars are expensive. All right. So you guys already know this. The whole halting of the H20 shipment is basically to limit China's access. So real quick, I know this is kind of going off into the global politics stage, but again, you just take this in, right? Just understand that a bigger game is being played, right? And, us as investors, we have to understand what's actually being played so we can better position ourselves, all right? So this was the Select Committee on Strategic Competition between the United States and Chinese Communist Party. I'm not going to go through this whole document because you guys can go through it yourself, but there was an interesting line. It's basically talking about how DeepSeek is trash. I mean, compared to OpenAI and how they steal a bunch of stuff. But this was something interesting. This is why I don't believe anything that always comes out of China, right? So according to this white paper, it was saying, because China / DeepSeek basically was saying that, hey, we created this new AI competitor to OpenAI, cheaper, at a substantial cost savings and with less chips, right? They said 10,000 chips or something, right? 10,000 NVIDIA chips. So the entire market completely overreacted to this news, saying, holy crap, you can create AI models at substantially reduced costs. China already caught up to OpenAI, Google, Microsoft, Apple, Amazon, all these major tech companies were spending billions and billions of dollars to create these AI models, and China did it with just a couple $1,000,000. Well, come to find out, that's not exactly true. They actually spent way more money than they led on to believe. And then only that, they said they did it with only 10,000 GPUs, but this report says that no, they did it with well over 60,000 chips. So again, I read through this stuff, and whenever there's huge market overreactions, that's a time to buy, right? That's a real time to buy. That's when you look at what's going on. You say, let me look under the hood. Maybe there's a little more to the story. And certainly in this case, in this point, there definitely is a lot more to the story. I think it's probably in this conspiracy theorist type of stuff, but I really think that the whole point of DeepSeek and the news that followed it was to rattle the United States market, to sell out of NVIDIA, bring the share price down, lose confidence in NVIDIA, lose confidence in all these companies spending all this money to build OpenAI or to build all these AI models, right? And say, no, we can actually do it for cheaper. We don't need your chips. Not entirely true. So, all right, guys, we got through all that stuff. Let's take a look at the chat real fast. And then we're going to move on to the market segments, and then we'll go from there. All right. So Galveston County says, history has shown even smaller new investors who buy into the market weakness do very well over the long term. A good rule to follow and keep ready cash on hand. Absolutely. That is 100%, right? Like, there's new investors getting in that have never had a loss before, and they're now going through losses, and they're just freaking out. So again, if you know your strategy, if you believe in your strategy, you understand everything, that all the nuances that go into that and how it's going to react to the market, then stick with your strategy. All right. Don't change your strategy just because, some other YouTubers or some new strategy came out or whatever. Like, stick to your strategy. Absolutely. Me, like, I'm still invested in REITs, and REITs have been in a bear market for freaking 3 years now, right? But I still am crazy about them. I'm still crazy about REITs. Nothing is going to change my mind about real estate. There's nothing anyone could say, because I know over the long term, over decades, real estate has not only beaten the S&P 500, but has also created the most wealth in America. So I'm of the camp that REITs, real estate, is here to stay, and I'm going to continue investing in it, right? It wasn't only recently, until I started learning about high income investing, that I started actually investing money into high income investments, right? Things like XDTE, things like XPay, things like NVW, right, or PLTW. That was a substantial shift in my strategy, but again, it's not the only strategy in the entire portfolio. I still have real estate, I still have REITs, and I still have a tech ETF. I don't want to pick and choose the winners or losers, right? I don't want to have to, do research on 300 different companies. I'd rather just own the entire sector of technology, which is why VGT, in my opinion, is a great pick, right? There's other ones out there. There's IETC. There's, what was it? IEW, I think. There's a couple other ones out there. QQQ, there's one, but I chose to go with VGT. So anyways, let's look at the poll. So the question for the poll was, are the chips in semiconductor companies cooked? 25% of you said yes, and 75% of you said no. And I'm going to go with the 75%. I definitely don't think semiconductors or chips are cooked at this time. I think, if anything, this is a great opportunity to buy. Buy the dip. Can it go lower? I don't know. Can we have a fast recovery? I don't know. Are they going to spike to the moon? No idea. But I do know that over the long term, the semiconductor space and chip companies like NVIDIA, like AMD, will recover and meet all new all-time highs. So I'm very bullish on those spaces, and I think over the long term they're going to do just well. I missed the whole Google, Amazon, Facebook, Apple Mag 7 craze, right? I missed all of that. Like, I was never putting my money into technology. So the tech space is very exciting to me. I'm very bullish on tech. I hope I'm not late to the game, but there's always this prevailing thought out there that there will always be another opportunity. So if you miss one, don't worry about it. There will always be another trade. There will always be a new company or another opportunity just over the horizon. You just have to look for it. All right. So I'm with the no. So I'm going to end that poll. So just reading on some of the comments here. Let's see. M2 says, get Powell on the phone. I want to be a part of their economic club. Well, hey man, I have his email. Yeah, he's my boy. No, I'm just kidding. James says, totally agree. Powell seems pretty sharp to me. Absolutely 100%. Citizen of the Year says, real estate is a scam. Yield max all the way. I know you're being facetious and I know you're being sarcastic, you jerk. Sauce Maker says, need a yield max refund. No, thank you. Please. It's like screwing up like instant rice, right? Like you can't screw up a REIT index, I guess, or something like, but they would probably find a way. All right, let me stop that before they come to my house and break my legs. But yeah, I know they actually do have a fund coming out. YieldMax does. And there was another one, NEOS. They have a cover call REIT strategy ETF called IYRI. It looked very interesting. I didn't buy it. The holdings it does have, I really do like those holdings, or most of those holdings. It holds a lot of the REITs that I own, so I know like it's kind of a higher quality REIT ETF in my opinion. But yeah, if I'm not gonna dog on them. But yeah, if they were to come out with one, I don't know how it would do. I'm even still very kind of hesitant about cepi. I can't find a better product out there. If there's a better product, please let me know. But, I was hoping Roundhill would come out with one, or maybe someone else, but it doesn't look like they are anytime soon. So, cepi, maybe it might be a diamond in the rough. I'm thinking it will be. They just recently came out with their dividend for cepi at 36 cents a share, which actually beat out some of their other weekly pay ETFs, like GPTY. Which they seem to have a steadily declining, dividend yield, but or cents per share. But we'll see. Cepi, I'm still very bullish on. Citizen says, I just don't get how you lose money in stonks. If you invest in SCHD, you'll never lose money. SCHD is the best ETF in the world, according to you, sir. So. All right. Okay. Let's move on. We'll hit this and then we'll hit the portfolio updates. All right. So SP 500 down freaking 2%, right? Almost 2.25%, right? This was a bloody day. Again, I always say if an index like the S&P 500 or QQQ moves up or down 1%, you can either expect a very bloody day or a very green day. Today was a very extremely bloody day, right? Hopefully over this next month, we don't end up back to our all-time lows below 5,000 points. We're hovering at 5,200, right? So hopefully we'll have greener days ahead of us. Hopefully some better news will come out and we end the week on a green day. NASDAQ 100, again, it's a tech-focused or tech-heavy ETF. They are down 3%. All right, this was a beating, especially since I'm invested into VGT, which is Vanguard Information Tech ETF. That one was down even substantially more because QQQ was down substantially. So I didn't even look at that portfolio yet, but I can already tell you it's not going to look good. Bitcoin looking good so far, staying around the $84,000 a coin. This has obviously been very volatile over the last couple of weeks, but I don't know. It's every time I check it, it seems to be hovering above 80,000. It's only when these really large dips happen. Usually it's on some really, really bad news, but the rest of the market is also tanking. But it has been hovering around the $80 to $84,000 range for a bit. So I don't know if it's going to break and go lower and go much lower, or it might break to all new all-time highs, right? Just interesting. So we have gold futures up. So gold, best asset performance year to date. All right, 26%. 26%. I was really toying with the idea at one point, like maybe I should just buy a 3x levered gold ETF. There was a few out there, or a 2x gold levered ETF. I just chose not to. But yeah, gold is doing very well. Again, this is a sign that investors are very pessimistic about the future prospects of the stock market, about equities. So, you know, everyone's kind of selling out and moving to safety, right? Moving to gold, moving to bonds, moving to treasuries. So this is a telltale sign of possibly what's to come, right? A recession or something like that, right? One thing to note, especially if you buy gold ETFs, just know that the tax burden is much different than investing into like a stock. All right. I know there's certain gold ETFs out there where it's like if you sell them, they're treated as a collectible or something like that. There's a collectible tax, and there's some that are just like your standard vanilla like capital gains tax. So again, just word to the wise, if you're going to buy a gold ETF, make sure you understand the tax implications. I'm not a tax professional by any sort, so you know, definitely speak to one. All right, let's see. US 10-year Treasury, again, this is the one I think is the biggest story out of most of these other asset classes, the 10-year Treasury, because if this stays elevated for a longer period of time, I think this will be kind of a nail in the coffin for us to head into a recession. Okay, Scott Besson on this interview, I didn't catch it, or I didn't mark it down, but he does say that he and the Trump administration are still continuing to work to bring the 10-year down. That is their focus. That is what they're trying to accomplish. So we had this huge spike here, and there's all this, you know, kind of conspiracy talk that, oh, it's China, they're dumping treasuries and this and that and yada yada yada. Secretary of Treasury Scott Bessent did talk about this. He did talk about that rumor. He said he did not see it that way. He did not see that China was dumping treasuries. It didn't look that way. He also mentioned that there was a huge buying spree for U.S. 10-year and 30-year treasury, or 10-year and 20-year treasuries recently. So he doesn't think that there was a sell-off from China. And I never heard, there was no one in the administration that confirmed whether this was true or not. You know, Trump was asked the same question. He didn't say yes or no. Secretary of Scott Bessent also said that is not what he saw as well. So again, I think this is the bigger story right here versus the stock market. If this continues being high for longer, it's going to be harder to refinance debt, and this can have, again, a cascading effect. VNQ, which is a Vanguard Real Estate Index ETF, this is what I use for kind of gauging the weather for REITs in general. So obviously we were doing well in the early morning. We were up almost a full percent, and then we kind of just fell off, right? So we're down just, you know, a little under 7 basis points. Real estate year to date, down 3% versus the S&P 500. Over the last month, we had this massive dip, which was kind of crappy. But over the last week, it looks like we have been recovering. So hopefully we'll continue recovering. Again, REITs have been in a bear market. They've been the most unfavored asset class on the stock exchange. So, I really think if we can get the 10-year down, then REITs are going to have a huge rebound. So just checking the comments real fast. Let's see. Certify says IYRI will probably end up working out. Okay. Well, I hope so for whoever holds it. That's how they get you with a big dividend, says Senpai. Absolutely. Latro, hey, welcome back. Note the divergence today. Bitcoin up, Q's down. Yeah, that was actually weird. That was actually very, very odd that the NASDAQ went down, but Bitcoin still remained fairly high. And there was another point of someone in the community, Bateman had mentioned that if you look at the year to date for the S&P 500 and for Bitcoin, they're like a point apart, right? They're not even a point apart. They're like 20 basis points apart. So much for a, asset class that is not correlated to the stock market. This whole digital gold thing, it's not supposed to be correlated to the stock market. Looks like it's starting to trade very close with the stock market. So again, just an interesting point is all. So Latra also says, I sold all my mining positions and finally sold AGQ today, added to the beaten tech sector, AMD, NVIDIA, and ADBW. I'm not sure which one that is. Adobe came to mind, but I don't think that's their ticker. You also bought Misty, MSTU, MSTZ, and iBit. Hey man, respect to you for buying Misty. All right. Anyone who's buying Misty, you have my respect, I cannot deal with that kind of volatility. I do own a small position in IBIT just because I don't want to hold, cryptocurrency in cold storage, hot storage, dealing with keys, passwords, all that other crap. I'd rather just put it in an ETF and call it a day. All right, so we got through all the stocks, the stock market stuff. Let's just do a quick look at the portfolio, and then we will wrap up this whole session. So beaten down dramatically, right? Just taking a beating this whole day. Let me make sure you guys can see this. Okay, I believe you guys can see this. Okay, yeah. So you did mean Adobe. Okay, cool. That's what I thought. I was like, I'm not familiar with that ticker. So Chippy, obviously my newest one, down. All right, down a little bit, down $157. I'm gonna try to add to this position as I get some additional income coming in. So I'm just gonna, again, just dollar cost average. I still really am bullish on semiconductors as a whole. And again, Chippy holds mostly US based semiconductor companies. All right, there's only 3 in the holdings at this moment that are outside the United States. And that is 2 from Netherlands, ASML, I forgot the other one, and Taiwan Semiconductor Company, all right, TSMC. So I'm still very bullish on US. I don't bet against the US. I'm always going to, bet for the US. And, again, I think we have a lot more runway for Chippy. Hopefully it performs well. Again, this is a cover call strategy that is not capping the upside, right? They invest directly into some of the holdings that they have, or invest into all the holdings that they have, right? So hopefully we see better days for the semiconductors, and we'll have better performance data for Chippy. All right. Their dividend was recently paid out, or declared rather, and it was I think 36 cents per share. So I'll be getting a nice fat $28 this week. So yeah, probably buy some more shares. Ondas, I actually bought $100 worth of Ondas. I don't know. The more I read about Ondas, the more exciting it's getting. I'm not saying go buy it. It is still a penny stock. This thing, could probably go to zero. I have no idea. But with the way the world is moving towards drone usage and counter drone technology, I think Ondas probably has room to grow. Of course, they have earnings coming up, I think in May. So I want to see exactly how they're doing. They did recently, and I say recently as, within this year, they closed a deal with the United Arab Emirate for the purchase of like $10 million worth of equipment. And I believe it's for their counter drone technology, their counter drone product, which they call the Iron Drone. So I think this company might have a little more room to grow. Again, this is a very, very highly speculative company. I wouldn't put anything sizable into this company. I only have like about $1,100. Again, nothing exciting there. PLTW, I was in the green by a bit. I was up 15 or close to $2,000 for a PLTW, and then we had the massive dip. So now I'm back in the red. Sometimes I think I should just sell as soon as this thing, as soon as I recover, but I'm going to hold Palantir because, again, long term, really like the prospects for Palantir and being the premier defense AI stock. NVW's NVIDIA 1-2x levered position. I already gave you guys a whole spiel about NVIDIA, so I'm not going to go over that again. XPay, XDT, taking beatings, right? They track the S&P 500 as the underlier. They've been taking a beating recently, so it is what it is, right? I know you guys want to see the margin stuff. So looking okay, a little spicy. I was at, I think 31,000, 32,000 last I checked, and now I'm down to 25,000. My plan is if things get way too bad, like if things really start to get shitty, I'm probably gonna have to sell probably Chippy. Honestly, I'd probably sell Chippy just as a start. And then if I have to sell other positions, I have to sell other positions. It is what it is. I'm still, I don't think it'll get to that point, to be perfectly honest, but you got to plan for the worst. Like I mentioned earlier, you have to take these recession things into account for your portfolio. Ask yourself these key questions. If your portfolio drops by 30%, are you going to be okay? Are you over leveraged? Are you using margin? Should you start paying off some of that margin, et cetera, right? 101 questions you can ask yourself. But yeah, that's the way I'm looking at this. So Shannon, man, I haven't seen you in a minute. Ondas already ran up. Not saying it can't happen again, but not sure it can launch again. Then again, I don't know nothing about it. Yeah, no, Ondas, they were going up till I think like the beginning of this year. Like they were reaching like $2.45 or something like that. But then this whole talk of defense budget cuts and everything else, I think that's what also caused it to go down. But then they had, they announced this partnership with Palantir that kind of propped the share price up a bit. But, nothing was spared when all this talk of tariffs and trade wars started coming about, and then recessions, etc. So again, this is a very highly speculative stock. I just bought it because, I don't know, I just bought it because, right? Counter drone technology does seem really interesting. I don't know if it would have really any application on the battlefield, because you'd have to lug this big ass box over there, and then just keep it out in the open. And then whenever drones get too close to the defense line, then these drones would pop out of this box and go hunt those drones down, right? But I don't know. I don't think like on a battlefield they would be helpful. Now they're supposed to be also helpful against drones that have fiber optic connections. So that was also seen on the battlefields of Ukraine and Russia, where these new drones, they have fiber optic cable running for like, I guess, a couple hundred meters or so. And because and I'm getting way into it, but basically there's electronic warfare systems on both sides that jam drone technology, and they're usually attached to like vehicles like cars, trucks, tanks, that kind of deal. But when you have a fiber optic cable, then those radio frequency jamming devices, they don't work anymore. So when they don't work anymore, because this drone's tied to a fiber optic cable, that drone is going to be able to hit that target. So what Ondas has for their Iron Drone technology is counter drone tech, which is these drones that will pop out of a box and be able to capture these drones before they hit their intended target. Now, that is a good thing, especially for drones that have fiber optics and they can't be jammed. So these drones I could see would have some type of application for that space. But again, I don't know. I don't know. I'm waiting to see what Ondas has to come out with. Anyways, guys, let's look at M1 Finance and then we'll close out this stream. Got to log in here because it always times out. One last check. All right, cool. Okay, so this is the M1 Finance portfolio. This is where I hold a bulk of my my positions, or a bulk of my REITs. So we've actually been recovering so far. So we were at one point, I think, negative like $4,000 or $5,000 for REITs, but it looks like we've been on a steady recovery. So again, I kind of already talked about, if a recession hits, how would REITs be affected? There would definitely be some impacts there, but not across every sector. Technology ETF, again, down $35,000. This is almost 50% of my losses right now. This alone is 50% of my losses. Again, I bought at all-time highs and then the market crashed. And same thing for Chippy. Bought at all-time highs and now Chippy and now semiconductors, the whole space is going down. I am the bad luck. I apologize, guys. BDC's kind of just doing their thing. Nothing exciting there. And then the crypto ETF, I'm invested into IBIT. All right, it's just down 11.7%. So that's it for this portfolio wrap up. That's it for this stream, guys. I hope you guys got a lot of value and kind of see things at a bigger picture and how everything kind of all ties together. I really, really enjoyed this stream and putting this one together because like really the fighting between the two superpowers is really interesting to see at such a huge level and how it impacts us as investors, right? Seeing this all in real time is crazy. It's just absolutely crazy. And it's hard to keep up with, right? It is definitely hard to keep up with. Brand new news comes out almost every single hour. And there's either a flip flop between tariffs or no tariffs, 125 to 245%. It's crazy. But I think we are headed for greener days. We just have to hang in there. Don't lose the shirt on your back. Protect yourself always. All right. But other than that, that's going to do it for me, guys. I'm going to head out and do whatever it is I do here. So with that being said, I appreciate you joining the stream as always, because without you guys, this would not even be a thing. All right. I always appreciate cutting it up with you guys in the chat. So outside of that, I will see you guys in the next stream. You have a great evening or a great afternoon, wherever you are in the world. I will see you